Welcome everyone. In this video here, you're going to be seeing a live execution from today with my Discord members. It is one very specific model that I utilize out of 3 of them. And this was a 53 handle trade on the NASDAQ. And at the end of this video, I'm going to go full in depth and explain to you why exactly is this model so precise and why is it so consistent. And you're going to learn all that in this video right here. There we go. Perfect. There we go. Now we got ourselves rolling. Okay, so we're longing 2 things here. We are longing this Fairway gap here, right here, and we're longing this 5-minute order block right here that was formed around equilibrium. Okay, that's it. So we're up about 80 ticks now. Okay, here's that buy side getting ready to be engaged. Okay, stop. It's getting a little bit too wide there, so there we go. So I told you guys that was what I was waiting for. This is definitely one of my models, one of 3 of them. Okay, that's trading to that 5-minute order block that was formed around equilibrium coupled with the Fairway gap. We had that there, so I longed it, and we have a buy side the quarterly target here. And just comes down to does it, perform or not. So we're gonna find out. 3 handles, okay? So we have a 53 handle take profit. And that's it. Now, ES isn't the better long because remember, we're in the premium in the range. The only reason why this long here on NASDAQ is valid is because, remember, here's our daily dealing range. Okay, low, high to low. This was formed at equilibrium. We trade back down into that. And that's it. That's one of 3 of my models. Okay, and I'm doing it live. Not market replay, not, a hindsight YouTube lecture. I'm executing one of 3 of my models live. All right, beautiful. Now remember, the main outlook here is, okay, we have this magnet on price up here with new week opening gap and the the midnight highs. Am I going the whole way up for that? No, because I don't need it. This is all I need up here. And then obviously the swing projection here, I actually failed to mention that we're using the body to body. We're on the lower time frame, so I'm using wick to wick. My apologies. 377. You want to project that up. Okay. You can do that on your own, but a lot of times that's what you'll look for in your terminus with short-term scalping ranges, okay? So you'll take basically you're taking the swing that took the sell side in the first place. That was the catalyst for your trade, right? You're using that, and then you're projecting that upwards, okay? So we have these fractal relative equal highs right here, above this high here. Let's see if we can get up to that. So risk is reduced. Okay, that first level we wanted to see tagged. And let's see if we can get our 53 handle take profit, okay? And remember, this is below our price swing projection, so this is very low hanging fruit here. Beautiful. And, oh, they wanted to make us wait a couple more seconds. And there we go, boom. There is 53 handles profit. We got the idea here, okay? We're longing this, and this is 100% strike right now, by the way. Okay, this model right here lost a single trade on stream using this right here, this order block around equilibrium, and I'm doing it live, okay? I have 2 mentorship videos covering this, okay? This is 100% strike rate. We have not lost with this model yet. Okay. All right, guys, so before I actually get down to the lower time frame charts and really explain in depth my model here that I utilized today, it's important to understand that you really need a very strong narrative and context behind everything on the higher time frame charts to really back and have that high probability model on the lower time frame. So look at the daily time frame here. Prior to coming into Tuesday, we see that we have a very large drop down. We all saw everyone was freaking out and saying the market's crashing, but informed traders such as myself, we all know that this is very normal and it was planned and right on time for the script. Now, one thing to note with this drop down here, very large drop down, we come down in the close proximity to these lows down here in the form of sell side liquidity. So I'm actually going to go ahead and map out this specific low right here. I'm going to tell you why. This right here is our classic quarterly low. So just like we view previous daily low, previous session low, stuff like that, that has a key pool of sell side liquidity below it. Same thing for quarterly, previous 3-month low right here. Now you're going to see that we actually failed to get down into that with this drop lower. But if we go to NASDAQ, you're going to see we actually ran that low. So we now have a SMT divergence forming on that daily time frame. We have NASDAQ sweeping previous 3 daily lows. So a very key pool of liquidity that's been taken from the marketplace. And then we have this very aggressive rally up off of that. I mean, just look at this large wick that left behind. And then following that, we have what? We work in the upper 75% of the wick. You can go ahead and measure that out yourself if you'd like. And then looking at it, we see what? Above market price, with us seeing lower time frame signatures and whatnot, we're easily able to identify that we're drawing towards this volume balance like a magnet. From my experience and everything I've learned over the years, you need to understand that volume imbalances are the most inefficient form of price action you could possibly have, especially and most importantly on the daily time frame. And in this case, okay, we work in 75% after the SMT is formed at the quarterly low. Aggressive wick off. Tuesday opens, trades below the opening to do what? Lull traders into getting short on a continuation to the downside, because everyone wants to short this. It's dropping lower and the market's crashing, right? Everyone wants to be a part of that and not miss it. So what do? We open, trade below the opening, lull them in, and rally up towards this magnet on price. So let's get a little bit more in detail here. We're going to drop down to the hourly chart on NASDAQ, and you're going to take a look and you're going to see some annotations on my chart here. So we always find, where's that midnight opening? Right here. Here's our midnight opening. We trade below that. Remember, that's the manipulation to lull traders into getting short. Okay, they have them right where they want them. And then what happens? We trade down into this short-term discount for value gap right here. We have this bullish order block right here. Okay, this right here. It's a bullish order block. The opening, extend that out. Boom. Look at the bodies cleanly respecting that. Beautiful. Boom. But the key takeaway here is look at this imbalance. Look at the midpoint and look where the bodies are. Every single body playing the script. And as soon as you see this little sensation here, which we're going to get more in depth on the lower time frame here, this sensation here, and the body rolls up and wicks off here and stays within the imbalance, that is one key signature, and that's kind of like our first clue to picking up on a buy program. So let's go ahead and drop down to the 15-minute chart, and you're going to see things a lot clearer here. So these relative equal highs above market price and a premium, they just so happen to align with that magnet on price right here. So this is what makes this even more high probability. It's more than just, the relative equal highs. No, it's engineered highs and a premium within the daily time frame draw, which is right here. So we generate these relative equal highs, we drop down, and like I said several times already, this gets traders to be interested in continuing shorting off of this aggressive move down. Okay, where do their stops go? Right above here. So coming into the New York session, what do? Here's our London low, just like I was saying earlier with the quarterly low on the daily time frame. This is a previous session London low. By default, this is going to have sell side liquidity below it. So what do? We drop down, trade up, drop down here. Turtle soup rate on sell side liquidity and a short-term discount. Remember, we're using this short-term range right here. It's our dealing range that we're working within. And then we trade the whole way down to 79% retracement level. But guess what? What do the bodies have? They're a little bit outside of it. That's fine. That's a mohawk. But the body's still relatively respecting the 79% retracement right here. So it's another key signature. With this sell side raid here, what else is happening? Well, we create this down close candle here. We shift above it. That creates our change to the state of delivery. And from there, we seek what? After changes in the state of delivery, the algorithm seeks buy stops, buy stops, buy stops. So we're going to get more in detail on this 5-minute chart now. So you're going to see that 15-minute change of the state of delivery turns into these 2 consecutives. right here. So these two consecutive down close candles, the key takeaway is what? These two consecutive candles drove us down below previous session low, and then we immediately have large displacement to the upside, market structure shift, create an imbalance, trades down here. That's the first distribution phase. We're not going to focus in on that today. We're actually going to focus in on this setup right here because this is really the model that has the highest strike rate for me personally, and that's why I'm teaching it here today for free. Okay, you don't need to join my Discord. You don't need to do any of that. I'm bringing the value right here, right now. So this right here is another very specific thing in an avenue that I can go down, but it's going to take up too much time in the video here, and this is a topic for another time. But this here is a time-based fair value gap, and you see that utilized beautifully to the T here. We trade down into it here, first distribution. We trade down here again, touching the opening range high here, and time-based imbalance, and we turn away from that. Now, what else is happening on a market structure basis after sell stops are taken? It's very key to tell yourself after sell stops are taken, because it's only significant because we took this pool of liquidity at a key discount level right here. Okay, and notice that hourly imbalance that I showed you to the left side of the chart here. What do? We get above it, close above it, trade back down to the high end. Where are the bodies residing? Right at the high end there. That's beautiful. That's not random. That's what it's coded to do. So if you take a look here, after we sweep the sell side, back to what I was saying about market structure, as soon as we do that, we create a swing low and we turn away from that. Do we have a higher swing low to the left? Yes, we do right here. Do we have a higher swing low to the right? Yes, we do right here. This right here cements an intermediate term low. So now with everything else that we have here in our targets to the upside, because remember, we don't have a setup if there is no target to the upside. With all this in play, we now have the markets saying, hey, I'm pointing my finger higher. This is where we want to go. I'm pointing my finger higher to you. That's what happens whenever they form these intermediate term lows. And then from that, we displace, creating a market structure shift, like I said, trades back down. And this is when things get interesting. We create this down close candle here. What is this? This is a bullish order block. This is within the second stage distribution. And what do? We expand to the upside in what? The direction of the draw, again, coming up off of everything that's backing us here. So the probabilities, by the way, are through the roof. We have all this backing us that I just explained. We have time-based imbalance. We trade back down into that, wick off instantly, not even giving it time of day here. Okay, this balanced price range, wick off instantly, close at the high end of the hourly imbalance, like I said. And then we have a change of the state delivery. Now, this isn't just some random change of state delivery. It's not some random order block. Okay, what's happening here is we take our dealing range. We have this high to the low. That's our daily dealing range. And where is this bullish order block formed? This is what really makes this the model and what makes it so high probability and precise. I don't care what anyone says. Nothing is more high probability than what I'm about to show you right here in terms of order blocks. This down close candle, this bullish order block, is formed right at equilibrium of the daily dealing range, right here. That's placed in. That's not random. It's a very specific thing that takes place, and it's the highest probable order block that you will find. So this is placed in at equilibrium. Okay? So we have that. We now displace above it. As soon as we trade a tick above the opening, that's a change of the state delivery. Does it create an imbalance? Yes, it does right here. Does it trade above a high? Yes, it does right here. In the direction of what? The draw, that magnet on price, which is right here. So with all this being said, let's drop down to the 1 minute chart. Okay? And you're going to notice a few more things on the lower time frame chart. Not only do we have that order block that we're using on the 5 minute chart, which is really what makes this so high probability in the first place, but also what do? We trade up, we generate short-term buy-side liquidity, retail sees this as strong resistance. Okay, their stops are going above here, and then we drop down. They're going to think this is some type of reversal, right? But all it's doing is clearing these two specific short-term lows right here. These two short-term lows have sell stops below them. And what does it do? It trades down. As soon as it trades below, that right there kicks back in the buy program. That's all that is needed to kick this algorithm back into its buy program. So as soon as we offset those who have been buying and we take the sell side liquidity, what do? We turn away from that quickly. There's our change of state delivery on that 5 minute order block. And what do? We trade back down into what? See the small little fair value gap within that opening to high range of the order block right here. We trade down into that fair value gap, order block, long it, hold for the direction of the draw here. Okay, in this case, we caught 53 handles, And, you know, the execution speaks for itself. One more thing to note here. Why did we not take this low right here? Why not? Let's go back to the 5-minute chart. This low right here did what? It traded down in the 5-minute fair value gap, creates a swing low. As soon as we see that, that is what? That is automatically turned into a rebalancing intermittent term low. And as we know, in market structure buy programs, right? Intermittent term low should not be broken if we're going to continue higher. Okay, so that's just one more little add-in. And one more thing I need to just add in here for completion's sake is obviously with us trading down in the sell side liquidity here, okay, balanced price range, time-based imbalance, which is a topic for another discussion, but we're also allowing those who have been shorting and obviously on the wrong side of the marketplace here to mitigate their loss, and that is the classic bullish breaker right here. Okay, so those who may have been shorting here, they're holding on, and all of a sudden, you know, they're in drawdown here, and as soon as it trades back down into the breaker here, that's the market allowing them to mitigate their loss, and that's what's going on with this drop down as well. Okay, so that's a nice little key add-in. But all you need to know is this model has a 100% strike rate. We have yet to lose inside of my Discord with this model. Now, it's important to note that this doesn't happen every single session. It's not exactly a common resource. Okay, it only happens at very specific times, and you need to really have a lot of patience to catch on to this move. So I hope you guys found this one insightful. Hit that like button, share, subscribe, whatever you got to do, and I'll see you guys in the next one.